Dear students, in this video we are going to learn important Part C problem from the semester examination point of view in the chapter Internal Reconstruction in the subject Corporate Accounting 2. The balance sheet of X Limited as on 31/12/2018 were as follows: liabilities and assets is given 20,000 preference share of 100 each, 20,000 into 100 20 lakh, 40,000 equity share of 100 each 40 lakh, 5% debenture 10 lakh, bank overdraft 5 lakh, creditor 10 lakh. Then goodwill 1,50,000, freehold properties 20 lakh, plant and machinery 30 lakhs, stock 5 lakh, debtor 4 lakh, profit and loss account 24 lakh 50,000. The balance sheet total is 85 lakhs. The company got the following scheme of capital reduction approved by the court. The preference share is to be reduced to 75 per share. So, the previous value is 100, now we brought down to 75. So, preference share is reduced by 25 each. And the equity share reduced to 37.50 per share. So, previously it is 100, now we brought into 37.50. So, equity share is reduced by 62 rupees 50 paise. Then debenture holder took over stock and debtor in full satisfaction of the amount due to them. So, the debenture holder took over stock and debtor for their settlement. Goodwill account is to be eliminated. Freehold property depreciated by 50%. The value of plant and machinery increased by 50,000. Pass journal entry and prepare balance sheet. So, with this information, we have to prepare revised balance sheet. Before that, we need to pass journal entries, necessary journal entries. Now, we go with the journal entry. Preference share capital to be reduced to 75 and equity share capital to 37.50. So, we need to make two entry for the first adjustment. Preference share capital account debtor. The value is 20 lakh. To preference share capital. Now it has been brought down to 75. So that is 20,000 shares into 75 become 15 lakh. The remaining is to capital reduction 5 lakh. You just circle it because we have the total capital reduction in the upcoming journal entry for write-off intangible asset and adjustment which is given like depreciation, intangible asset written off. The next one, equity share capital account debtor 40 lakhs to equity share capital to capital reduction. Now we brought into 37.50. So 40,000 into 37.50. We go with the calculation. $40,000 into 37.5, 15 lakhs. Then the remaining is capital reduction. 40 lakhs minus 15 lakh is 25 lakh. That is 40,000 into 62.50. Here 40,000 into 37.50. The next third one, debenture account debtors 5% debenture is given 5%. So 5% debenture account debtor 10 lakh. They took over stock and debtor. So write to stock The stock is given the balance sheet 5 lakh, to debtor 4 lakhs as a full settlement claim. So, and full satisfaction of the amount due to them. So, instead of 10 lakh, they accepted for 9 lakh. What is the difference? 1 lakh. We have to write it as to capital reduction. And then before write off the intangible asset and fictitious asset, we need to see whether any increase in asset. We have the fifth one, E, the value of plant and machinery is to be increased by 50,000. So, plant and machinery account debtor are 50,000 to capital reduction account 50,000. That's it. Now, we need to write off first one in fictitious asset, next one intangible asset. Then if the asset is depreciated, like that is fixed asset is depreciated, we have to write off. If you are getting balance in the debit side, we have to take it as goodwill. If you are getting balance in the credit side, we have to take it as capital reserve. If there is no balancing figure, you need not bring goodwill as well as capital reserve. Sometime it will get tally. Then capital reduction account debtor. See the amount here, 5 lakh plus 25 lakh, 30 lakh, 31 lakh, 31 lakh, 50,000. It is increased by 50,000. So, 5 lakh, 25, 30 lakh, 31, 36 lakh. So, first of all, we have to write off fictitious asset. Fictitious asset is nothing but any loss which is given in the balance sheet asset side, that is called fictitious asset. So, here profit and loss account is there. So, to profit and loss account 24 lakh 50,000. Now, we have write off this. Then see, next is intangible asset. Here given goodwill account is to be eliminated. So, we have to write off goodwill also. To goodwill account 1 lakh 50,000. Then freehold property to be depreciated. To freehold properties 50%. So, 20 lakh into 50% become 10 lakh. That's it. We considered all the adjustment. That's it. Now, total it 24 lakh 50 plus 1 lakh 50, 26 plus 10, 36. So, it is get tally. There is no goodwill or capital reserve in this problem. Then we need to go with balance sheet. So, share capital, we have preference share capital is 15 lakh, then equity share capital is 15 lakh. That's it. Then see here debenture, we write off, we settled, so it should not come. Then bank overdraft and credit card, this will come under the heading current liabilities. And that bank overdraft 5 lakh, creditors 10 lakh. So, when you add here 30 lakh, 40, 45 lakh. The A. Then come to next asset. So goodwill we write off. So tangible asset fixed, and write tangible asset. That freehold properties. You can write the new term is PP and E. Plant, property and equipment is a new name instead of fixed tangible asset. So freehold properties 20 lakh, but it is depreciated 50%. So 20 lakh minus 10 lakh, 10 lakh is the revised value. Then plant and machinery, it is increased by 5 lakh. Adjustment E. So 30 lakh plus 5, 35 lakh. I can write it here. 20 lakh minus 10 lakh as a depreciation here. 30 lakh plus 5 lakh, it is increased, so 35 lakh. Then stock, depends whether took a stock and data, so that should not come in the balance sheet. P&L account also we have write off, that also should not come. So 10 lakh plus 35 lakh, 45 lakh. It is B. So balance sheet is get tally A equal to B. So it is important part C problem from the semester examination point of view. All the very best. Thank you.